Good afternoon, guys. It's about 2 o'clock Pacific time. Today is December 26th. Hope everybody is well. Markets today, all three were up slightly. In fact, very strong on the NASDAQ and the Dow, not so strong on the S&P 500. NASDAQ up about 0.5%, 81 points. Dow up about 159 points, 0.4%. And similarly, the S&P 500 up 20 points, 0.4%. Very strong, all three moves, but volume was very low. Just take a look at this as an example. The QQQ is the NASDAQ index, and usual volume is about 44 million shares traded. But this today is about half that, about 22 million. So volume is very low. Just keep that in mind. But still, the Santa Claus rally continues. That's a good sign. Okay, one of the stocks that showed up on the radar is Okta. Okta makes cybersecurity solutions, identity management solutions. If you look at the cybersecurity space overall, as I mentioned a couple of days ago when we were talking about CyberArk, there are lots of different spaces. Cloud security, access brokerage, for example, companies like Zscaler to PNW, Palo Alto Networks that makes firewalls, cloud-based firewalls, to endpoint security, which is CrowdStrike and SentinelOne. What Okta does is manage single sign-on authentication and authorization. Identity is what we are calling it overall. So that what that means is when someone signs it to an application, they want to make sure that they can sign to all the enterprise applications instead of having to enter their password a multiple set of times. Their levels of authority and their levels of availability of the application are preset, managed very well, very effectively. That's what Okta does. Okta competes. They actually bought a company called OneLogin, which they were competing with. They compete primarily with Azure AD and Azure B2C or Active Directory is what they call it. Microsoft Active Directory, which became Azure Active Directory, is also the single sign-on solution that provides authorization and authentication. Used to also compete with companies like LDAP solutions from other companies, including our solutions provided by IAM, Identity and Access Management from AWS and Google. But Okta is a leader by far in that market. They've done very, very well for themselves. And so the company in that now that it showed up on the radar, I thought it'd be a good idea to look at why it is showing up, what they do, and then quickly go through the five-step process. We always start with the financials. We start with the income statement on an annualized basis. 160 million in revenue 2016 was what Okta was doing. Now it's doing 1.8 billion, so over 10 times. Very strong growth, which is very good. 80%, 60%, 50%, 40s. Now increased their growth again in 2021, and then seems to slow down a little bit more again to the 40%. And now on a trailing 12-month basis, we're roughly doing about 30 something percent. Very strong margins in the 60-70% range. Gross profit is 1.3 billion, 70% range. And then they've still not made money. If you look at it, they've lost 80 billion, now they've lost 813 billion. So the good thing is they're trying to their net income is getting to the point where it's not manageable really, but it's at least reducing a little bit. So that's a good sign. That's probably one of the reasons why it's probably also showing up. So revenue growing now at 20% range quarter over quarter on an annualized basis. So this was used to be in the 40%, 30% range, and now it's come down to the 20% range. So it's definitely slowing revenue growth. 500 million, so about 2 billion on a trailing 12-month basis. And even the profits, net income has been getting better. So from losing 200 million down to only about 80 million. I say only, but that's still quite a bit. Net margin still very strong in the 70-80% range. Gross margins in the negative 20%, 15% range, but they should get a little bit better. From a balance sheet perspective, they have nearly about $8 billion to $9 billion in cash, about 2 billion of it. This is because of the acquisition. 6 billion in non-current assets is because of the acquisition, and then nearly 1.5 billion in debt. So a little bit tight, but not too bad. Let's look at cash flow. Just make sure, yeah, they have enough cash coming in so they can manage through that portion. That's usually with all the service companies. They've not done very well this year. Just to give you a little bit of context, compared to most of the other cybersecurity companies, Okta stock has been okay at best. They're nearing their 52-week highs, but Okta stock compared to a CrowdStrike or compared to even a SentinelOne, Zscaler, and Cloudflare hasn't done too very well. While the system is showing up, look at this. They've been up about only 30% for the year. To give you CrowdStrike as a context, is about almost nearly 70%, 80% for the year. Most of the cybersecurity stocks are up almost 100% for the year. So this is poor performance for the year, probably because they've been losing a lot of money and now trying to get a little bit better. So their gross margins are in the 75%, net margins is the negative 13%. That should improve a little bit. The valuation 6 times for 20% growth is a little bit rich. They don't have PE to speak of, so that's a little bit of a challenge. But 20% growth, just to give you context, the median SaaS multiple on sales is about 13.78 on a 35% growth. So this is definitely attractive compared to some of the other guys. It's not perfect, but it's very, very good compared to some of the other companies. So roughly about $15 billion in market cap for a company doing 2.1 billion in sales is not a bad idea, especially because they have $7 billion in cash available. So that's a good sign. Okay, so let's look at the stock on a monthly basis. First is where we start. This seems like a Christmas tree. Went up all the way to the top and to the right with a high of 292 and then made it all the way at the bottom. But if we look at the long-term range where it is right now on the monthly basis, this is just basing, is the best I could call it. It's probably moved out of a good range so far, probably a 52-week range, but the very long-term basis, this is just moving sideways. This is a stage 1 accumulation. This is a stage 2 markup. This is a stage 3 distribution, and this is a stage 4 markdown. So we're now building a new base, stage 1. It's definitely gone out of some of the ranges before. This is probably a little bit better than where it was even a year ago, but definitely still basing. It has to get out of a lot of these. So it's got to get out of the 111 mark for me to get really excited about starting to make a big move. But this is also a good move up. Look at this, all the way from 42, it's doubled to 92 in about 1.5 years. This was the lowest it got to was October 2022. So a little over a year and a half, a little less than a year and a half, but it's done fairly well, but still 30% for the year. It moved up very nicely between October and December of 22, and then seems to have, done okay, 30%, but not bad. So still, if you look at it on the weekly basis, there's a lot of resistance coming up for it, even in the 107, 110 range. So it may move up, but still, there's a lot of resistance. If you look at it from a weekly chart perspective, it just came up against multiple set of highs. So this is a high, this is a high, this is a high. It didn't fall down, still seems to be going up. So that's a good sign. It seems to want to break that resistance. Let's go to the daily chart just to get a little bit of a better perspective. So, okay, so this is the reason why. This is phenomenal. This is a strong move consistently. It's broken out of a little bit of a resistance right now, but the RSI is stretched, so is the MACD. So this is probably due for a pullback. Look at this, in 8 to 10 days, more than that, 14 days of consistent up and to the right usually means a little bit of a pullback. It's only had one pullback in the last 12 sessions to 14 sessions, but tried to move up. Look at this. So this was in this range, 60 range, tried to make false breakout, another breakout, false breakout, came back, false breakout. This time it's actually broken out. I don't know if it's going to be sustainable, but remember that the bigger resistance coming up for it is 170 range, 107 range, sorry. Let's draw that just to make sure that we know 107, 111 range. That's the resistance for it that is coming up. So while it might move from the 90s to the 111, there's still room for it to move, but it's pretty stretched. Look at this, you can make out. So there's a lot of room, about 10% move for it to move, room, more than 10% room for it to move up, nearly 20% move up. But the both the RSI is stretched, probably due for a pullback, and the MACD is stretched as well. The 200-day moving averages is okay. The 20-day moving average is up and to the right, 50 days up and to the right. So it probably needs a little bit of a pullback. My immediate point of where it might take a good break would probably be in this range, in the 83 range, maybe a little bit higher as well. That's maybe a little bit too much. May not get up all the way to the 83 range, move it up a little bit higher, probably in this range. This is the key pivot point, the 84 range, maybe a key pivot point. Even the 87 range looks like a good pivot point, but realistically, it's going to have to come to the 200-day moving, 20-day moving average first, which is in the 81 range right now. Last couple of days it's been moving up, so that it might move a little bit higher up. If I had to draw where it is from a channel perspective, this is a very good channel. It's been moving very nicely within the channel, up and to the right. So it's probably going to get a pullback definitely to the 83, 87 range. That's a good buying zone because this support might become the resistance, 86, 87 range, and then wait for it to get to the 20 to be able to move up again to the 111. next part of the year, so January 1st onwards, is probably going to be a little bit of a break after the very nice November, December rally. So I'd wait for it to come to the 87 range and then have a move up to the 111 again. Thank you very much for watching. Hope you guys had a great Christmas. Please subscribe and let me know what you think and comment. Thank you very much.